Right. Okay. So what we will do today is we are going to continue on the revision pack number 4. Right. So in revision pack number 4, last week we discussed up to question number 20. So I'll be discussing from question number 21 onwards. And what we are going to do is we are going to complete the MCQ set of questions, and we will be doing the remaining questions on the prime entry books and the accounting equation. Right. Okay. So we'll read question number 21. Use the following information to answer questions number 21 and 22. Shakti, Kalpa and Pawan carried out a partnership, sharing profits and losses in the ratio of 5 to 3 to 2 respectively. On 31st of March 2016, Pawan retired. So Pawan has retired from the partnership. And on this date, the goodwill was estimated at rupees 1 million. It is the policy of the partnership not to maintain a goodwill account. They are not maintaining a goodwill account. In the books. Shakti and Kalpa continued the partnership, sharing the profits and losses equally. So they are going to share the profits and losses equally, and they are going to continue the partnership. The summary of the transactions recorded in the current accounts of the partnership for the year ending 31st of March 2016 is as follows. So we have the profit share the salary. We have the profit share the salary 500, 300 and 200. Interest on capital, we have 400, 400, 400. Drawings, we have 300, 200 and 100. Then we have the salaries paid, which is also part of a drawing. Salaries paid is also a drawing. Right? Which is rupees 40 and 22 Pawan and Shakti. Right. So those are the information given to us. Okay. Right. Then the next part of the question. You are supposed to write the journal entry to adjust the goodwill in the partner's capital account. Journal entry to adjust the goodwill in the partner's capital accounts. Right? Okay. Now, this part actually we in the theory class we discussed recently. Okay. But let me explain. Okay. Now, what we know is goodwill is the good image or the reputation, that an entity has developed over a period of time. Goodwill is a good image, good reputation that has created by a business over a long period of time. That will actually attract the customers, attract and retain the customers. The goodwill will result in attracting customers and retaining the customers. So goodwill is created because of the long-term establishment of that business. How do we measure goodwill? Goodwill can be calculated as market value of the business minus the value of the net assets. We can calculate the goodwill as market value of the business minus the net assets. Net assets means the equity value. So this way you can calculate the value of the goodwill. Now, we know that a partnership is a business with 2 to 20 people carrying out, right, with the motive of earning a profit. So 2 to 20 people get together and they run a business with the motive of making profits. After doing this business for a while, some partners might decide to retire from the partnership. Then at that point, when a partner is going to retire, we need to value the goodwill. Why? Goodwill is that good image, that reputation created by the business over a long period of time. So that partner who is going to retire has also contributed to create that goodwill. The partner who is going to retire has also contributed to create that goodwill. So he has an entitlement over that goodwill. Right? When a partner is retiring, he has also contributed to create the goodwill. So we'll ask for his goodwill share. Right? Therefore, we have to give it to that particular retiring partner. Okay? Because once that partner leaves, the business will continue. No? So the remaining partners are going to enjoy the benefits of that goodwill. Now here, three partners together created this business. So the customers knows about the business. They have been doing this business in a very good manner. But one partner leaves, but the business is going to continue now. With the remaining partners under a new agreement, they are going to continue the business. So the new partners are going to enjoy the goodwill that is created by the three partners together. Therefore, to the leaving partner, the retiring partner, the new partners may have to compensate for that goodwill share. Right? Are we clear? So when the three partners together, they build up the business. So one guy leaves, but others are going to continue and enjoy the benefits. So that the partner who is leaving shall be compensated by the partners who are remaining. Right? So that is what we are going to do here. Okay? Right. Now, as per the information given in this question, Lamai, the value of the goodwill is 1000. No? Value of the goodwill is 1000, 1 million. Okay, 1 million. Right? 1 million. And the examiner specifically says you are not supposed to open up a goodwill account. So, we have to account goodwill without opening up a goodwill account. So, then you need to account this using the capital accounts. Using the capital accounts. Using the capital accounts. Using the capital accounts. Right? So, what are we going to do here is we are going to give this goodwill. We are going to give the goodwill to the old partners. Right? We are going to give this goodwill to the old partners and we are going to cover it up. We are going to charge it from the remaining partners. Right? So, what we are going to do is, Lamai, we are going to give the goodwill share to the existing, the old partners, the three partners, we are going to give them the goodwill share through the capital accounts. We are going to credit it. And we are going to recover, we are going to cover it up from the remaining partners because they are going to enjoy it, right? After the partner retires, but the remaining partners are going to enjoy the future benefits. Therefore, they have to compensate the retiring partner. That is how it works. Okay? That is how it works. So, we are going to pass the double entry, right? We are going to charge it to the new partners. We are going to charge it to the new partners. The new partners who are remaining are Shakti and Kalpa. So, capital account of Shakti. Now, the reason they are going to share their profit on equally in a one-to-one basis, no? So, that will be debited 500,000. How do we calculate 500,000? 1 million divided by 2, 1 to 1. Okay. Then capital account of Kalpa debited another 500,000. So that is 1 million divided by 2. Okay. So this is where we charge from the remaining partners. And you need to allocate that to the old partners. So which include all three once again. Huh? So the capital account of Shakti, now their old profit sharing ratio was 5 to 3 to 2, is credited 500,000. 5 to 3 to 2. Capital account of Kalpa credited 300,000. How do you arrive at this figure? 1 million multiplied by 5 divided by 10. Here 1 million multiplied by 3 divided by 10. And finally, capital account of Pavan credit 200,000. That is 1 million divided into 2 divided by 10. Okay. So basically, what happens is, right, if I were to show it to you, okay. So if we look here, Shakti's capital account, Lamai, right? Shakti's capital account, debit 500,000, credit 500,000, there's no impact. Okay? Shakti, Kalpa, and Pavan. So if you look at the old ratio, 500, 300, and 200, you are going to credit. Under the new ratio, 500 and 500 will be debited. This is what is happening now. 500 debited, 300 credited, 200 credited. So the net result is for Shakti, just nothing happens because of the Pawan leaves the goodwill impact. But Kalpa is debiting 200 from his capital and that is being given to Pawan. So when Pawan is leaving the business, the benefit is basically enjoyed by Kalpa. So that is why Pawan's goodwill share is compensated by Kalpa through the capital account. Actually, really speaking, there's no that much of a difference to Shakti. Earlier, he used to enjoy 50%. නේ? යාට කොහොමත් 150ක් තිබුණානේ ළමයි. 50%. Now also he's getting 50%. Okay? Right. Okay. ළමයි, are we clear with this idea? This is a question from the 9th lesson in your grade 12 syllabus, partnerships. Okay. හරි. මම මෙහෙම ඔයාලට කියලා දෙන්නම්. Right? මේක අහගන්නකො ළමයි දැන් goodwill එකක් එහෙම නැත්නම් කීර්ති නාමයක් කියලා කියන්නේ අපි කාලයක් තිස්සේ බිස්නස් එකේ ගොඩනැගෙන දෙයක් නේ. ඒ කියන්නේ බිස්නස් එකට තියෙන හොඳ නම කියන එකනේ, reputation එක කියන එකනේ. ඒකටනේ customers ලා එන්නේ. එතකොට ඒ goodwill එක build up කරන්නේ ඒ ආයතනයේ ඉන්න ඒ අයිතිකාරයෝ ටික, ඒ managers-ලා ටික. එතකොට partnership එක නම් අපි ගත්තොත් මේ partnership එකේ goodwill එක හදලා තියෙන්නේ ශක්ති, කල්පයි, පවනුයි කියන තුන් දෙනා. දැන් ඔතනින් පවන් යනවා. partnership එකෙන් එයා යනවා. එයා partnership එකෙන් ගියාට business එක නතර කරන්නේ නැහැ. business එක continue කරනවා. ශක්ති, කල්පයි කියන කමක් නැහැ, පවන් ගියාට අපි continue කරමු. දැන් එළියේ ඉන්න මිනිස්සුන්ට වැඩක් නැහැ. පවන් හිටියද, පවන් ගියාද? ඒගොල්ලන්ට පේන්නේ බිස්නස් එක තියෙනවා තාම. ඒගොල්ලෝ normal විදියට එනවා. අර පරණ goodwill එකේ benefit එක ඉතිරි වෙලා ඉන්න partnersලා කොහොමද enjoy කරනවා. එතකොට අයින් වෙලා යන partner ගේන තර්කයක් මම අවුරුදු ගාණක් තිස්සේ මහන්සි වෙලා තමයි මේ goodwill එක හැදුවේ. ඒකන්ද මම අයින් වෙලා යනකොට මට මේ goodwill share එක ඕනේ. ඒක මට දෙන්න කියලා කියනවා. එතකොට මේගොල්ලෝ බලනවා right අපි කොහොමද මේක දෙන්නේ. හරිද? දැන් goodwill account එකක් open කරන්නේ නැතුව දෙන්නත් ඕනේ. ඒක තමයි සාමාන්‍යයෙන් කරන විදිය. හරිද? කියන්නේ අපි දන්නවනේ මේ goodwill account එක record කරන ක්‍රම ගොඩාක් තියෙනවානේ. goodwill එක record කරන ක්‍රම මේ partnership මේ වගේ arrangement එකකදී මේ වගේ change එකකදී ඉතින් ගොඩාක්ම යන්නේ මේ capital accounts through record කරන විදිය. එතකොට මේකෙදි කියනවා goodwill account එකක් නැතුව කීර්තිනාම ගිණුමක් විවෘත කරන්නේ නැතුව කොහොමද මේක account කරන්නේ? එතකොට අපි කල්පනා කරලා බැලුවොත් එහෙම මේ develop කරපු goodwill එක අයිති පරණ partnersලා තුන් දෙනාට, ශක්තියයි, කල්පටයි, පවන්ටයි තමයි අයිති. ඒගොල්ලොන්ට පරණ sharing එකට දෙන්න ඕනේ. 5 to 3 to 2 දෙන්න ඕනේ. එතකොට ශක්තියට 500,000 යනවා, කල්පට 300,000 යනවා, මෙයාට 200,000. මේ සල්ලි වලින් ගෙවන්නේ මේ අයිතිය පෙන්වන තැන. අදන්නවනේ capital account කියලා කියන්නේ අයිතිය පෙන්වන තැන. මේ විදිහට තමයි යාගේ sharing එක යන්නේ. එතකොට ඒක අය කරගන්නත් එපා. අපි කියන්නේ ඔයාට අයිතිය දෙනකොට තව කෙනෙක්ගේ අයිතියකින් ඒක අඩු කරන්න ඕන. පරණ තුන් දෙනාට අයිතිය දුන්නා. හරි. goodwill එකෙන් 5ක් ඔයාගේ, 3ක් ඔයාගේ, 2ක් ඔයාගේ. ඒක මේ පැත්තෙන් කොහෙන් හරි charge වෙන්න එපා. එතකොට charge කරන්නේ ඉතුරු වෙලා ඉන්න partnersලා දෙන්නට 50-50. ඒ දෙන්න continue කරන්නේ equally නේ profit sharing එක. එතකොට කල්පටයි, ශක්තිරයි, කල්පටයි 500 each debit වෙනවා. capital කියලා කියන්නේ යාලගේ අයිතිය. එතකොට ශක්තිගේ පැත්තෙන් මේ පැත්තෙන් 5ක් ආවට අනිත් පැත්තෙන් 5ක් අඩු වෙනවා. හැබැයි කල්පගේ 3ක් එනවා, 5ක් අඩු වෙනවා. ඒතකොට කල්පට ඇත්තටම බැලුවම කැපිටල් එක අඩු වීමක් තියෙනවා. හැබැයි අඩු වෙන කැපිටල් එක අරගෙන යනවා පවන්. ඒ කියන්නේ මොකද්ද? එළියට යන පාර්ට්නර් එයාගේ goodwill share එක අරගෙන තියෙන්නේ ඇත්තටම බැලුවම කල්පගෙන්. මොකද හේතුව පවන් ගියාම benefit එක එන්නේ කල්පට. එතනද මේකේ මේ 5ට 3ට 2 කියන එකේ කොහොමත් 150ක් ශක්තිය enjoy කරානේ. 1 to 1 වෙනකොට ශක්තියට 50%ම තමයි. ශක්තියට profit එකේ වෙනසක් උන්නේ නැහැ. කල්ප කලින් enjoy කරේ 30%. දැන් enjoy කරනවා 50%. ඒක හන්දර goodwill එකේ benefit එක වැඩිපුර enjoy කරන්නේ කල්ප. කල්පගෙන් තමයි එතකොට ඒක sacrifice වෙලා තියෙන්නේ පවන්ට. Okay? හරිද? තේරුණාද? Are we clear? Okay. One thing is you don't need to understand all the logic here, but I'm trying to explain what is underneath, because you need to know මේක මොකක්ද වෙන්නේ, ඇයි මෙහෙම වෙන්නේ කියන එක පොඩි idea එකක් තියෙන්න ඉපේ. That is why I am explaining. Okay. හරි මේකේ වෙලා තියෙන දේ තේරුණාද? Okay. So we are done with the first part of the question. Right? හරි. මේ අපි ඉන්නේ දැන් revision pack number 4 එකේ question number 21. හරිද? Right. අපි යනවා question number 22 එකට. Right. Based on the information given, you are supposed to calculate the following. Profit of the partnership for the year ending 31st of March 2016. ඔයාලට cal කරන්න කියනවා partnership එකේ profit එක. The total profit appropriated to Shakti and Pawan. Total profit appropriated to Shakti and Pawan. හරි. අපි නිකන් මේ නිකමට ගන්නකො profit appropriation account එකක්. right? නිකමට අපි ගමුකෝ. right? appropriation account එකක්. අපි දන්නවනේ ළමයි, what we know is, right, after preparing the profit or loss account of a partnership, you need to allocate, you need to appropriate that profit among the partners based on the agreement over the ordinance, partnership ordinance. partnership එක ලාභය ගණනය කරලා ඉවරනාට පස්සේ එන ලාභය partners ලා අතර බෙදන්න එපේ. එක්ක ගිවිසුමට අනුව නැත්නම් අර වගන්ති අංක 24 partnership ආඥාපනත හවුල් ආඥාපනත. Right? So, as per the information given here, they haven't given us the profit figure. අපිට profit එක කීයද කියලා දීලා නැහැ. They haven't given us the profit figure. We don't know. But they have given some other information. අපිට දීලා තියෙනවා තව තොරතුරු ටිකක්. Salaries 500, 300 and 200. අපි salaries විදියට බෙදලා තියනවා ශක්ති කල්ප පවන් 500, 300 and 200 as per the information given. So that means the total allocation is 1000. Okay. Then as interest on capital 400 each we have allocated. So as interest on capital we have allocated Shakti, Kalpa and Pawan 400 each. Right, 400 each. Based on the information given, na? 400 each. So that will come to 1200. Okay. Then they are talking about the drawings. Now drawings is not going to the profit appropriation account. ඒ කියන්නේ current account එකටනේ ළමයි. Profit appropriation එකට යනවා interest on drawings. If there's any interest on drawings, yes. Salaries paid is also a drawing. ඒක යන්නේත් නැහැ. ඒකට මේ දෙක ඇත්තටම අපේ profit appropriation account එකට යන්නේ නැහැ. So question is silent about any final profit share. Nothing. එහෙමනම් we need to go backward, ne? From whatever the figure here, once you deduct these things, it should be 0. Then your profit should be 2200. Ne? So your profit should be 2200. Right? අපි මේ මෙතන තියෙන profit එකනේ බෙදලා දෙන්නේ salary, capital, profit share විදියට. අපිට ඒක දීලා නැතුව අනිත් තොරතුරු දුන්නා නම් backward යන්න ඕනේ. So it is 2200 is the profit share. 2200 is the profit share. Right? 2200 is the profit share. Right. Total profit appropriate to Shakti. Shakti रे ගිහලා තියෙන total profit එක ගත්තොත් salary 500, interest on capital 400. වෙන මොනවත් නැහැනේ. So 500 plus 400 is 900. Then to Kalpa it's 300, sorry, Pawan, Pawan it's 200 plus 400 it's 600. මේ හදලා දෙන්න. මේ Pawanට මේ 200 උයි 400. ඒක තමයි යාට appropriate වෙන profits ටික. So the answer is 900. So that basically puts into the question on partnerships. Right, I think in all the revision sessions this is the first time I have given a question on partnerships. Right, but going forward we can, right, a little by little we need to add on the partnerships questions as well as non-for-profit organizations. Then the revision will essentially cover all the grade 12 lessons and it will be easier. So all the grade 12 lessons will be recapped, right? So it will be helpful for you, right? We'll look at question number 23. There's a small modification to this question, I'll tell you. Right. Use the following information when answering question number 23 and 24. Trial balance of Lakshita's business prepared as at 31st of March 2019 was not agreed. Trade receivable control account balance. So the receivable control account balance appeared in the trial balance was 50,000. Appeared in the trial balance was 50,000. Profit for the period as per the drafted financial statements were, right? Profit for the period as per the drafted financial statements were 124,500. 124,500. Later, following errors and omissions were discovered. Total of the sales journal. Total of the sales journal, rupees 32,000 has been debited to the trade receivable control account as 23,000. So to the receivable account, it has been debited as 23,000, right? Okay. Discount allowed, or the discounts given, discount allowed, rupees 5,000 has been recorded in the cash received journal as rupees 500. Rupees 500. Return inwards, that is sales return. Return inwards of rupees 10,000 has not been posted. Not posted in the return inward account, sales return account. A debtor balance of rupees 3,000 has not been extracted. It's not trial balance to the debtor's ledger. It should be debtor's ledger, right? So it has mentioned as trial balance, which is a mistake that we have to correct. It has been extracted to the debtor's ledger. Debtor's ledger. Okay. Debtor's ledger. So these are the mistakes or the errors that has found. Question number 23. Select the answer which shows the suspense account balance. Suspense account balance recorded in the trial balance and the correct profit for the period. Correct profit for the period. So there are 4 errors and omissions. You need to find the suspense account balance and the corrected profit. So we have to take one by one separately. What is the double entry that could have been passed? Right. Look here. Here, if you look at the first one, it says the total of the sales journal. Now you know that the total of the sales journal, you are passing a double entry. Debtors control account or the trade receivable control account debit, sales credit. Total of the sales journal, you are passing the double entry debited to debtors control account, credited to sales. Now what they're saying is total of the sales journal of 32,000 has been debited. So that is what you have to debit to the trade receivable account as 23,000. So they have put the double entry. Let me show it here like this. First one. But they have passed the entry is, they have passed the entry, the debtors control, they have debited 23. And to the sales, they have credited 32,000. 32,000. Then what will happen? If you take a suspense account, now you know that suspense account is what? When the debits and the credits of a trial balance is not tallied due to an accounting error, the difference is recorded in a suspense account. So ideally, as per the double entry mechanism, every transaction has a dual impact. That dual impact we record as one side a debit, other side a credit. So ideally the debit total shall be equal to the credit total. If you have correctly accounted it. But sometimes you are making mistakes that will lead to a difference in the debit total versus the credit total. The difference you keep it in a suspense account until you identify what are the errors and until you clear them. So what will happen? Now in my suspense account, you can see credit side is okay, but debit side is lacking 9,000. So let me put 9,000 here to the debit side. So this is coming from the debtors control account. Okay. So debit side, yes, 9,000 is there. Okay. Right. We look at the other one. Next item. Discount allowed rupees 5,000 has been recorded in the cash received journal as 500. Discount allowed 5,000 has been recorded in the cash received journal as 500. Now, here the discount allowed 5,000, they have mistakenly put that as 500. That means the double entry will be passed to 500. There won't be any suspense account impact. What is the double entry they will be passing? In the second scenario, they will be passing the double entry, the discount allowed expense debited 500 and the debtors control credited 500. This is the entry they are passing. Right? They should have passed this as 5,000. No, it could have been 5,000. So as a result, there's a difference of 4,500. Right? So they should have passed 5,000, but they have passed only 500. So there's a difference of 4,500. But this has no impact on the suspense account. There's no impact on the suspense account. But this will impact your profitability. This will impact your profitability. Let me put the impact on the profitability here. So we have been given the profit calculation. අපිට profit එක දැනට cal කර profit එක දීලා තියෙනවා. We have been given the calculated profit as 124,500. 124,500. Okay, this is the profit we have been given. So ideally, discount allowed, even though it is not impacting the suspense account, it is 5,000. No, you have recorded only 500. No, so your expense is understated. 5,000 expense recorded as 500 means your expense is understated. Therefore, that you have to adjust. Then what will happen? When you adjust the discount allowed, your profit will come down. No? Right? When you increase an expense, the profit will come down by 4,500. So 4,500 profit will come down. Okay. Right. Now we have dealt with two items. Two items we have dealt with. Okay. Right. We are moving towards the third item. Return inwards of 10,000 has not been posted in the return inward account. Now guys, what will happen in a sales return? When a customer is returning the items, when a customer is returning the stuff, right? Then what you need to do is, right, one side you need to reduce the debtor. Customer is returning, they are no longer going to pay for that. So we have to credit the debtor. We have to credit the debtor. On the other side, my sales are getting returned. I have to put that to a sales return account or the return inward account. Now what they're saying is, it has not been posted to return inward account. So ideally, the third entry, what they have passed is a single entry. They have passed debtors control account credited 10,000. They are missing the debit entry. That goes to the suspense account. Right? The return. That goes to the suspense account 10,000. 10,000. Okay. So they are not recording the return inward that has not been posted. So that will be recorded in the suspense account. Now think about the impact of this on profit. Now, sales returns are going to deduct the sales value. Your return inwards are going to reduce the sales value. When your sales value is coming down, your profit is also coming down. So because of the sales return, your profit will come down by 10,000. Your profit will come down by 10,000. Okay. Profit will come down by 10,000. Right. So one side, yes, it's only a single entry that will impact the suspense account. On the other side, it's a sales return that is definitely going to impact the profitability. Fourth item. A debtor balance of 3,000 has not been extracted to the debtor's ledger. Sorry, it was mentioned as trial balance. It is debtor's ledger. Now we know that the ledger can be divided into two as your the common ledger or the general ledger, and we have this personal ledger or the private ledger or the sub ledger. Personal ledger. So private ledger, sub ledger or the personal ledger is there for the creditors and the debtors. Creditors and the debtors. This is there for the creditors and the debtors. In the personal ledger or the sub ledger, you just pass a memorandum entry, a single entry, just to have a record on each debtor balance, each creditor balance separately. You just maintain a sub ledger. The double entry mechanism is working on the common ledger or the general ledger, where you pass the debit and the credit. Separately for the debtors and the creditors, you are maintaining a single ledger, single entry to have individual account balances. Now, what they are saying is, there was a debtor with a 3,000 balance. It has not been recorded or extracted to the debtor's ledger. It is not there. So that will not impact our general ledger. General ledger okay, right. So that is not going to impact our general ledger. So accordingly, your suspense account balance is 19,000, which is a debit balance, right? Adjusted profit is 110,000. So 19,000 and 110,000, answer number 4. Okay, 19,000 and 110,000, answer number 4. Look at question number 24. Select the answer respectively shows the trade receivable account balance to be shown in the statement of financial position and the total list of trade receivables. Total list of trade receivables, right. So you are being asked to calculate the corrected debtors control account balance. Corrected debtors control account balance. And here the list of trade receivables, they are not asking the corrected balance. Maybe debtors list before corrections. So you have to read the questions properly. They are asking show the trade receivable account balance, that is the debtors balance, to be shown in the statement of financial position. When you are showing in the financial position, it should be a correct balance. And they are just saying the total of the list of trade receivables. So that is before any corrections. Right. As per the information given, right, the trade receivable balance is 50,000. No? We are going to start with 50,000. And we have to do the corrections. Right. We'll take one by one. If you look at the first one, the total of the sales ledger 32 is debited as 23. So 9,000 to be debited to the debtors control account. So we have to add 9,000 here, right, for that to be debited amount. Ideally, when you are making a sale, you have to debit, no? They have debited only 23, no? So adding 9,000. Okay. Then discount allowed is 5,000, but you have recorded as only 500. In the cash receipt journal, you have recorded that as 500. Then what will happen? Right? So when you are recording that as 500, so definitely there's a 4,500 missing. That also we have to account, no? So we need to deduct 4,500 from there. 500 already deducted. We are looking at 4,500. Return inwards, it's only impacting the return inward account, not the debtors control account. Therefore, debtors control account, no impact on the third adjustment. They have correctly recorded. Here, we have put that. Debtors control account, correct. Last one is relevant only to the debtors ledger. It's not impacting the debtors control account. So we can get the answer here, 54,500. 54,500. 54,500. Then the debtors list before the corrections you'll have to take. Once again, I'll start from this 50,000. This 50,000. Now guys, this 9,000 error was there in the debtors control account, right? Was there in the debtors control account. It was not impacting the debtors list, no, right? So therefore, this error was not there in the debtors list. That we have to add. It was not there in the debtors list. Therefore, no issue on that. Okay. Second item is about this discount allowed. Discount allowed, it clearly says 5,000 discount allowed is recorded in the journal, cash received journal as 500. So when you are recording something in the journal, one thing, your general ledger is also getting messed up, general ledger is also wrong, and also your debtors ledger is also wrong, right? So therefore, this mistake is there in both debtors control account and the ledger. So this 50,000 includes that error where we corrected here, but we are looking at before the correction. So no need to correct that 4,500. 4,500 correct කරන්න ඕනේ මේ error එක තියෙන balance එක තමයි අපිට ඕනේ before corrections නේ. Right. Return inward, right? The third adjustment, it is not impacting the debtors. It's only impacting the return inwards account. Finally, what they're saying is debtors balance 3,000 has not been taken to the debtors ledger. So even though the balance is 59,000, 3,000 they have missed. So that we have to deduct. So the uncorrected debtors ledger is 56,000. So again in the answer number 2. Number 2 is the correct answer. Okay. It's kind of a tricky question. Okay. ටිකක් හිතන්න තියෙනවා. එතකොට මේක ජර්නල් එකේ රෙකෝඩ් වෙන තැනක වරදක් නම් උනේ කොහෙ කොහෙටද ඇඩ්ජස්ට් වෙන්නේ. ඒතර මෙතන ගන්න ඕනි corrected balance එක, අතන ගන්න ඕනි before the corrections. So you have a lot to think. Okay. Right. So we'll move on to the last question. Question number 25. Following information is related to a business which is not maintaining, it's not marinating, maintaining proper records. During the year, part of the stocks were destroyed. So we have the sales, we got the purchases, we got the opening stock, we have the stocks as at 1st of 14th of January or whatever. Then we have the 31st of March balances. It should be 1st of April, sorry. And the drawings, 1/3 is a cash drawing. Here they are making a small mistake. In your tute, it might have mentioned as margin. Please correct that to markup. Gross profit markup is 20% on cost. It's not margin, it's markup. Right. So you are supposed to calculate the cost of the goods destroyed. You are supposed to calculate the cost of the goods destroyed. We'll do the calculation. Now, we know that we have been given the information on markup, which is 20%. So we know that markup is always on cost. You are keeping the markup on cost. Then what will happen? Selling price is equal to cost plus profit. When you are keeping the profit on cost, cost will be 100. Cost will be 100. And you are keeping a profit of 20. Therefore, the selling prices will be 120. So what we have just got is the unit prices. There are two concepts in pricing, markup and margin. In markup, you are keeping the profit on cost. Profit on cost. So if the cost is 100. In margin, you are keeping the profit on selling price. Then the selling price will be 100. Right. Then we have the sales figure, which is 600. We have the sales figure, which is 600. Right? 600, the sales. Now, we can calculate the cost of sales using this sales figure. How? This sales, if you can divide by the selling price, and if you can multiply it by the cost, you will get the answer. So what will happen? 600 divided by 120 multiplied by 100. You will arrive at a cost of sale of 500. You will arrive at a cost of sale of 500. You will arrive at a cost of sale of 500. Okay? Right. Now we have the cost of sale. We have the cost of sale. Then we can, using this information, we can do the calculation like this. We know that, right? Your opening inventory, we know that your opening inventory, as per the information given, the opening inventory is 40 rupees. Okay? And for that, we are going to add the purchases. Your purchases are 540, no? Then from that, we have to deduct. There's an inventory drawing. So I'm going to deduct the inventory drawing. Here they say total drawings is 30, 1/3 is cash. So 1/3 is 10, no? Then 2/3 is inventory, which is 20. So the inventory drawing is 20. Okay. 1/3 is cash, 2/3 is inventory. Then the closing inventory, that also we have to deduct. Closing inventory is coming to a value of rupees 30. Now look at the value what we are getting. 40 plus 540 minus 50 is 530. 530. Here. Now our cost of sale is suggesting it to be 500. But based on the normal calculation of opening stock plus purchases minus closing stock drawings and purchase return and stuff, you get 530. So there's a difference. There's a difference. 530 minus 500, we have a difference of 30. This is your cost of destroyed items. Your cost of destroyed items are coming to a value of rupees 30,000. Cost of destroyed items are coming to a value of rupees 30,000. ඒකේ ලොජික් එකක් මම කියලා දෙන්නම්. කොහොමද වෙන්නේ ළමයි? අපි සාමාන්‍යයෙන් කැල් කරනකොට මම මෙතන පොඩි විදියට දාන්න. Opening inventory එකට purchases එකතු වෙනවා. ඕකේ මොන හරි inventory එක destroy වෙලා තිබුණොත් ඒක අඩු වෙනවනේ. අපි හිතමුකෝ මේ වෙන මොනවත් නැහැ කියලා මෙතන. හරිද? ඔන්න මම ගන්නම්කෝ මේ ගානේ හිටිය ඉන්වෙන්ටරි ඩ්‍රොවින්ග්ස් උත් තියෙනවනේ. ඒකත් අඩු වෙන්න බෑ. ඕකෙන් ක්ලෝසින් ඉන්වෙන්ටරිත් අඩු වුණාම අපිට එනවා cost of sale. අපමණ එන්නේ. right? අපිට එනවා cost of sale. දැන් මට destroy වෙන inventory එක මෙතන isolate කරන්න ඕනේ. I need to isolate this one. මේකේ value එක ගන්න නම් මොකද මම කරන්නේ? හරිද? එතකොට මම කරන්නේ මේ set එක කොහොම තියෙනවා නේ? opening inventory තිබ්බා. ඒකට purchase add කරා. හරිද? ඊට පස්සේ ඒකෙන් inventory drawing අඩු කරා. මෙයාව අනිත් පැත්තට ගෙනියන්න අපිට යාව නෙවනේ. අපිට ඕනේ inventory destroy වෙච්ච එකේ cost එක හොයාගන්න. cost of sale අනිත් පැත්තට ගිහින්. ආයේ දැක්ක. opening inventory okay plus purchases minus inventory drawing minus closing inventory එකෙන් අඩු කරනවා cost of sale එක. What you are getting is inventory destroy. What you are getting is inventory destroy. Okay. So lamai in revision paper pack number 4 I have put 25 MCQ questions and those 25 MCQ questions we have covered. And those are really good questions where there are certain areas you need to think and you need to attempt as well. Okay? Hari. එහෙනම් ඒ ටික cover කරා අපි යමු to the next part of the paper. ඊළඟ part එකට අපි යමු. හරිද? Right. So we are going to do the second part of the paper. Look at this question. I'll start with the requirement. There are lots of transactions. Okay, look at the requirement. Required. Show the impact of these transactions with value in the accounting equation and state whether each value is going to increase or decrease in front of the value. So you have been given a format, transaction number, PPE, inventory, receivables, cash, long-term loans, trade payables, other payables, and equity. Then you are supposed to calculate the revised cash balance and the revised profit. Right? Okay. අපි බලමු how to tackle this paper. Let me put some answer formats for මෙතෙන්ට ටිකක් දාගෙන තියන්නම්. Right. We'll start from the beginning. Someone conducts a retail business. The draft income statement for the year ending 31st of March reported a profit of 600,000. The draft statement of financial position as at 31st of March showed a cash balance of 50,000. However, he does not maintain books of accounts properly. It was revealed subsequently that the following transactions had not been recorded in the books of accounts. The transaction, sale of goods on credit for rupees 80,000. The cost of these goods were 60,000. The return of goods sold on credit. The return of goods sold on credit for rupees 36,000. So they are returning the goods of rupees 36,000. Donation of goods costing 10,000. There's a donation of goods costing 10,000. The maintenance expense of the business were rupees 10,000. Of this, rupees 6,000 paid personally by someone. and the balance was paid by the business. Balance was paid by the business. Balance paid by the business. Obtained a bank loan of rupees 300,000 on 1st of July at 12% interest per annum. Interest is not yet paid. Interest not yet paid. Purchase of a three-wheeler for rupees 280,000 on cash. Settlement of rupees 30,000 from a debtor against rupees 50,000 payable to him as a creditor. The balance was paid in cash. Payment of rupees 12,000, the life insurance premium of Saman. Receipt of the amount due on transaction number 1. Receipt of the amount due on transaction number 1 after deducting 5% discount. After deducting 5% discount. Receipt of rupees 15,000 written off as bad debts during the previous year. Right. So you got like 10 transactions, right? 10 transactions that we have to account, right? There are 10 transactions that we need to record. Okay. Right. So you need to draft the statement. So we have to prepare the format like this. And we have to calculate the revised cash balance and the revised profit for the year. Right. We'll draft the formats. So PPE, inventory, trade receivables and cash. Right. Then we have the long-term loans, trade payables, other payables, and finally we got the equity. Right. So these are the items we need to record. Okay. So there are 10 transactions we need to record. Plus, not only that, right, you are supposed to calculate the revised cash balance and the revised profit. So for that even we will open up a statement, right? So you need to calculate the revised cash balance and we have to calculate the revised profit. Right? As per the information given, profit is 600,000, cash is 50,000. So the profit so far is 600,000 and the cash so far is rupees 50,000. Okay. Right. So what we need to do is one by one transaction you need to adjust to the statement as well as you are going to adjust to the cash as well as the profit. Okay. Right. So you need to open up two simple statements like this and you have to put the adjustment. Whenever if it is going to hit the cash balance or the profit, you are going to put the impact here. And it will be easier. Right? Okay. So we'll start from one by one. Right? We'll start with the first one. Right? Okay. First one, it says The sale of goods on credit of 80,000 and the cost of these goods was 60,000. They haven't recorded these transactions. So this transaction of sale of goods on credit has not been recorded. So when you are selling goods on credit, right, one side your cost of the inventory will come down. So inventory will be reduced by 60,000. You are selling these items on credit now. So as a result, the trade receivable will increase by 80,000. Trade receivable will increase by 80,000. You are earning a profit of rupees 20,000. You are earning a profit of rupees 20,000. You are earning a profit of rupees 20,000. Okay. Right. So this is impacting a profit. So I'll be adjusting that here. The profit on sale. Profit on sale is 20,000. So it's impacting the profit. I'll be adjusting that to the revised profit statement. Profit on sale 20,000. Okay. Right. Then look at the next transaction. Second one. What they're saying is second one. The return of goods sold credit for rupees 36,000. Right, return of goods sold on credit for rupees 36,000. Now here the question is little silent on the cost of the items, right? Cost of the items we don't know, right? Only thing is you can actually use kind of a mechanism to calculate, but here we have the relationship of 80 versus 60 and we can apply, but question is silent whether they are maintaining the same profit margins, right? So that it's better only to record the sale of return, right? If someone were to calculate the cost of the items and to do the adjustment, that's okay. But here I'll be adjusting only the return of the goods. And these are two different transactions. We cannot say that the sale value here, part of it has been returned. No, these are some transactions that has not been recorded. So this one is a separate transaction. This one is a separate transaction. If it is from the same customer, they should have mentioned the name. Sale of goods to someone 80,000 with a cost of 60,000 has not been recorded. Return of items from someone has also not been recorded. Like that, they should have given the names. In the absence of names, we can see these two are two different transactions. මේ ගනුදෙනු දෙක එකිනෙකට කනෙක්ට් කියලා හිතන්න අපිට අමාරුයි ළමයි. හරිද? මොකද මේක නිකම්ම කියලා තියෙන්නේ මේ ගනුදෙනු රෙකෝඩ් කරලා නැහැ කියලානේ. අනිත් එක නවකින්වත් මේක කනෙක්ට් වෙන්නේ නැහැ. ඒක නිසා මේ උඩ තියෙන profitability එක apply කරලා මේකේ cost එක හොයන්නත් බෑ අපිට. ඒ වගේම මේක උඩ එකකට connect කියලා හිතන්නත් අමාරු. මේක separate transactions දෙකක්. එහෙනම් අපි sales return එක අපි record කරමු. We are going to record the sales return assuming the inventory is properly recorded. So because of the sales return, one side the receivable will come down. Receivable එකෙන් අඩු වෙනවා 36,000. And on the other side, because of the sales return, the profit will come down by 36,000. 36,000. කවුරු හරි කෙනෙක් ඒකේ මේ assumption එකක් දාලා එකම profitability එක maintain වෙනවා කියලා cost එක cal කරලා හැදුවත් ප්‍රශ්නයක් නැහැ, ලකුණු හම්බ වෙනවා. හරිද? එහෙම cal කරලා ගන්න විදිය පෙන්නන්න ඕන නම් I'll show you, right? ඒකේ මම ඔන්න logic එකට පෙන්නන්න ළමයි. Earlier the sale value is 80, cost is 60, no? Therefore, the profit is 20. So you can create a relationship, ne? 20 divided by 80, which is 25%. So from 36 is the sale value. So of that 36, 25% is profit, which is 9 rupees. Then the cost is 27. එහෙම කෙනෙක්ට ඕනේ නම් cost එක calc කරගන්න පුළුවන්. 80 න් 20යිනේ profit එක 25 නේ. එහෙනම් 30න් 25ක් කියන්නේ 9යි profit එක cost එක 27යි කියන්නේ. Somebody wants. Right? එහෙම වෙන්නේ අපි මෙහෙම එකම profit margin එක maintain වෙනවා කියන තර්කය උඩ. එහෙම අපිට හැම වෙලේම කියන්න බෑ. හරි? Right. So this is impacting the profit. So I'm going to adjust the profit here. Profit, I put it here as sales return. Sales return is impacting my profit by 36,000. This side the profit because of the sales return. The third item is about a donation of goods costing 10,000. Goods costing 10,000 are being donated. Then what will happen? Because of the donation, my inventory is coming down. My inventory is coming down. Donation is an expense that will lead to reduce my profit. My profit will come down due to the donation. Right? Because of the donation, one side my inventory is coming down. On the other side, my profit is coming down due to the donation. My profit is coming down due to the donation. So my profit is coming down due to the donation. We look at the fourth transaction. The maintenance expense of the business were 10,000. Of this, 6,000 was paid by Saman. Saman has paid 6,000 by his personal money. It's kind of an additional capital or a negative drawing. So Saman is paying 6,000 of it. Balance was paid by the business. Right. We'll try to put here. Now it's a 10,000 worth of an expense. Someone has paid 6,000. So business is paying 4,000. My cash is coming down by 4,000. It's an expense of the business. Therefore, the equity should come down by 10,000. Equity should come down by 10,000. On the other side, the owner is pumping money as an additional capital. Therefore, the equity will increase by 6,000. This is the additional capital. This is the maintenance expense. So these are going to impact both cash and the profit. Let us adjust the maintenance expense. Maintenance expense here minus 4,000. Maintenance expense, we have to take the entire 10,000. Entire 10,000. So 4,000 deducted from the cash, 10,000 is deducted from the profit, and 6,000 is being added. Right. Look at the fifth transaction. Obtained a bank loan of 300,000 on 1st of July and a 12% interest per annum. Interest is not yet being paid. So interest is not being paid, interest is not being accounted. Right? So if the interest is not being paid, it's obviously in this question, interest is also not being accounted. Right? So we have to account the interest as well. Generally, you don't have to, but in this question, they say that those transactions are not being recorded. If the loan is not recorded, interest is obviously not recorded. සාමාන්‍යයෙන් loan එක interest තිබුණොත් අපි හිතනවා interest එක account වෙන්න ඇති කියලා. මේක loan එක account කරලා නැහැ. Loan එක account කරලා නැහැ කියන්නේ interest එකත් account වෙලා නැහැ කියන එක. Loan is also not recorded. That means interest is also not recorded. We have to record both. Right. First of all, we'll record the loan receipt. Cash will increase now. Cash will increase 300,000. Loan will increase 300,000. Right? Loan will increase 300,000. So let us calculate the interest. 300,000 multiplied by 12%. And we are taking on 1st of July. 1st of July to 31st of March is 9 months. So the interest will come to 27,000. Lama, remember 27,000 interest is not been paid yet, right? So 27,000 interest is an expense, right? So one side, my profit will come down by 27,000. It's an expense. It is not being paid yet. It's an accrued interest. Therefore, my liabilities will increase by 27,000. Liabilities will increase by 27,000. Right, so we'll add. So the loan balance, we are going to add the loan 300,000 and we need to deduct the interest 27,000. We'll move on to the sixth transaction. Purchase of a three-wheeler for 280,000 on cash. So on sixth transaction, we put it here. Sixth transaction, you are purchasing a three-wheeler for 280,000. So my cash is coming down by 280,000. You are purchasing a three-wheeler for 280,000. Cash is coming down. So the cash will come down because of the three-wheeler. Cash is coming down by 300,000. 300,000. Settlement of rupees 30,000 due from a debtor against 50,000 payable to him as a creditor. The balance was paid in cash. Settlement of rupees 30,000 due from a debtor against rupees 50,000 50,000 payables to him as a creditor. The balance was paid in cash. Okay. So I'm going to do a settle net of transaction. Debtor is coming down by 30,000. Balance I have to pay in cash 20,000. My creditor will come down by 50,000. So I'm going to net off the creditor against the 30,000 debtor and 20,000 cash payment. 50,000 worth of creditor is netted off against the 30,000 worth of debtor and a cash payment. Okay. So then that debtor settlement is impacting the cash. So creditor settlement. Let me put that as a creditor settlement. 20,000. Okay. Right. Coming towards the eighth transaction. Payment of rupees 12,000 for a life insurance premium of Saman. So Saman's life insurance premium is being paid by the business. So one side the cash is coming down, 12,000. It's a drawing, right? So you are paying the life insurance premium of the owner. So when you're making a payment on behalf of the owner, it's a drawing. So 12,000 is a drawing. It will not impact the profit. It's a drawing. Cash coming down, equity comes down, 12,000. So let's deduct the drawing. $12,000. Then the ninth transaction says receipt of the amount due on transaction number 1 after a discount of 5%. After a discount of 5%. So as per the transaction number 1, if you can remember, sale of goods on credit is 80,000. So the debtor value is 80,000. And you are getting the settlement, receipt of the amount due after a 5% discount. So from this, we need to deduct the 5% discount now. The cash discount, so it's 4,000 now. So the amount of cash you are going to get is 76,000. So the debtor is 80,000. The discount given is only 5%. Cash you are going to get is 76,000. Right. So the ninth transaction, debtor, we are going to recover 80,000. Cash we are getting only 76,000. 4,000 is a expense called discount received, discount allowed. Sorry. 4,000 is the discount allowed expense. Discount allowed expense is 4,000. Discount allowed expense is 4,000. Right? So we will adjust the 76,000 cash received from the debtor and the discount allowed. Cash from debtor 76,000 minus discount allowed expense 4,000. Discount allowed expense 4,000. The last transaction, receipt of rupees 15,000 written off as bad debts during a previous year. So last year you have written off a bad debt. You know that when you are writing off a bad debt, what will happen? Let's say 15,000 was a debtor, right? You are going to write them off. So from debtor, you are going to deduct 15,000, right? So the credit, and to the P&L, you charge the debit as a bad debt expense. Bad debt expense 15,000. So subsequently, when you receive 15,000 as a bad debt recovery, when you receive that as a bad debt recovery, one side the cash will increase. Cash debited 15,000. Cash will increase. But you can't credit the debtor because debtor is already credited. When you receive cash, ideally you credit the debtor, no? Debtor is already credited. So you can't credit the debtor. Only thing is now we have put that entire thing to a bad debt expense, but we don't really have an expense. We have to remove that expense. So this will be credited to something called bad debt recovery. $15,000. Okay. So one side the cash will increase and the bad debt recovery is a reduction of your expense. Your profit will increase. Right. So the last transaction is a bad debt recovery. Cash will increase 15,000. Profit will increase by 15,000. Cash will increase by 15,000. Profit will increase by 15,000. So we'll put that to the cash, bad debt recovery. $15,000. Then you need to add that bad debt recovery. 15,000 here. Right. So you can take the total 50,000 minus 4,000 plus 300,000 minus 280,000 minus 20,000 minus 12,000 plus 76,000 plus 15,000. So I'm getting an answer of 125,000. 600,000 plus 20,000 minus 36,000 minus 10,000 minus 10,000 minus 27,000 minus 4,000 plus 15,000. I'm getting an answer of 548,000. Okay. So we have received the answers. The adjusted cash balance is 125,000 and the adjusted profit is 548,000. Right. Okay. So we have completed the question number 1. Right. So we'll look at question number 2 here. Question number 2 here. Let me look at the requirement. You are required to prepare the following accounts. You are required to prepare the following accounts in the general ledger using the T account format for the month of April. For the month of April, sales account, debtors control account, raw material purchases account, creditors control account, advance payment account. So you are supposed to prepare 5 T accounts. Then you are supposed to prepare the manufacturing account. You are supposed to prepare the manufacturing account for the month of April. Then you are supposed to prepare the income statement for the month of April. Then value of the property, plant and equipment, prepaid expenses and equity as at 30th April. right? So sales account, debtors control account, raw materials purchase account, creditors control account, advance account, manufacturing account, income statement, PPE, prepaid balance, prepaid expenses, and the equity balances. We'll start from the beginning. Dimuthu commenced the manufacturing business on 1st of April, investing rupees 900,000, right? So Dimuthu has started the business investing rupees 900,000. The summary of transactions carried out during the month of April 2002 is given below. Summary of the transactions recorded in the cash receipts and payments journal. Now remember, you are not supposed to prepare the receipts and the payments journal. You are not supposed to prepare it. We have the sales. So obviously it's a cash sale. 6,000. Receipts from the debtor, 2,000. Raw material purchase, 1,200. Payment to the creditor, 800. Advance payment for the raw material purchases, 300. Wages to machine operators, 400. Production supervisor salary, 700. Factory electricity, 60. Factory rent, 600. Administration expenses, 200. Purchase of a machine on 1st of April, 4,000. Okay. Right. Then totals of other prime entry books. Other prime entry books. Sales journal, we got 12,000. Purchase journal, we got 8,000. Sales return journal, 500. Right? So we have the sales journal, which is representing the credit sale. Purchase journal, we have the credit purchase. Sales return, we got the information. Only rupees 100,000 worth of raw materials has been received on 27th April for the advance payment. Against the advance payment, they are receiving only 100 rupee worth of raw materials. This is not yet recorded. Not recorded. Rupees 300 receivables from the debtor is not recoverable, and it is to be written off as bad debts. Factory rent per month is rupees 200, and the rent has been paid for the first quarter. Right? For the first quarter. Quarter means 3 months. Right? We have paid. Here, the factory rent 600 is 200 into 3. The electricity bill of rupees 50 for the month of April 2022 has been received on 10th of May. Right? Was received on 10th of May. So far for the electricity, we have paid 60. We have paid 60. The bill value is 50. So we have done a prepaid expense. The machine had a useful life of 10 years. The residual value means lamai, value you can get, value that can be obtained by selling PPE at end of useful life. So this is basically an estimation. Residual value is a future estimate. Residual value means lamai. Now, for an example, this is a machine, no? After using this machine for like 10 years, you can scrap it. No, you can just sell it for maybe for the iron and stuff. You can just sell the scrap it out. So you're getting something out of it now. 10 years you are using the machine, then the usage period is over. It's done now. You can't use it furthermore. You just try to sell it off and earn something. So that future value that you're going to get at the end of the useful life is what we call the residual value. It's an estimate, but we have to adjust that in the depreciation. Machinery is depreciated on a straight line method. At the end of the month, the inventory balances were as follows. Here, raw materials 300, work in progress 80, finished goods 100. Okay. So this is the question you are supposed to prepare some T accounts and the manufacturing account and the P&L. Okay. Right. First of all, we'll draft the statements. Right. So you have been asked to prepare the sales account, debtors control account, right? Then raw material purchase account, and you're supposed to prepare the creditors control account, creditors control account, and the advance payment account. Keeping the manufacturing account and the income statement for the other page, you are supposed to calculate the value of property, plant and equipment as well. Property, plant and equipment you need to calculate. Then you need to calculate the prepaid expenses. As well as you need to calculate the equity. Right? So these are the items you are supposed to calculate. Right? 5T accounts, PP account, PP balance, prepaid expenses, and equity. Right. Then I need to draft the statement of manufacturing account and the income statement. This is Dimuthu's business. Let me draft the manufacturing account. Dimuthu's business. Manufacturing account. For the year ended, for the month ended 30th April 2022. Figures are in rupees. We can do the question in thousands. And we are supposed to prepare the income statement. Dimuthu's business. Statement of profit or loss for the month ended 30th April 2002. Figures are in rupees thousands. So I just basically drafted the format of the manufacturing account and the statement of profit or loss, right? So we'll start doing the question. Okay. Right. So we look at the information given. Starting with Dimuthu is starting the business by investing 900,000 in the business. So that basically there is a starting point of our equity. So equity, we are starting with a capital. Equity, we are starting with a capital of 900. I'm doing the question in thousands. I'm doing the question in thousand. So equity is 900, starting the capital 900. Okay, right. Summary of the transactions carried out in the month of April is given to you, the cash receipts and the payments. What we need to do is one by one, we will put them to the information given here, right? So the way that we are going to do is, if we have a T account here, we are going to put it directly to the T account unless we are going to adjust that to the statements. That is how we are going to work. At first one, sales 6,000. So definitely cash will be debited, sales account will be credited. I'm going to credit the sales account 6,000. I'm going to credit the sales account 6,000, right? Sales account will be credited 6,000 as cash. Debited to cash account, credited to sales account 6,000. Okay, right. Then received from the debtors 2,000. From the debtors we are receiving 2,000. So then what will happen? Debited to cash, credited to debtors control account. Debtors control account will be credited 2,000 as cash. Debited to cash, credited to debtors control account 2,000. Right. Raw material purchases 1,200. Raw material purchases 1,200. So it's a cash purchase. Credited to cash account, debited to raw material purchase account. Sorry, raw material purchase account will be debited 1,200 as cash. 1,200 as cash. Right? The next item. Payments to creditors 800. Payment to creditors 800. So credited to cash, debited to creditors control account 800. Cash. Right. The next item, advance payment for the raw material purchases. Advance payment for the raw material purchases 300. So credited to cash, debited to advance payment account 300 as cash. Right? Credited to cash, debited to advance payment 300. Wages to machine operators. Wages to machine operators. Now, that is not directly linked with any other item, right? Wages to the machine operators. So it's a manufacturing business. Wages paid to the manufacturing operators. That is kind of the main salary expense. So that will be recorded in my manufacturing account, credited to cash and debited to wages account. So let me put up the basic items here. So in the account here, raw materials, you have to start with the opening inventory. We don't have. Plus do the purchases. Doing some adjustment, you will come to the minus closing raw material inventory, where you will arrive at the raw material consumption. So to here, I'll be adding the direct labor cost. My direct labor cost, which is wages. Right? Direct labor cost, wages. Question is silent about any wages payable or anything. We don't have any wages payable. Right? Therefore, we can directly put the wages expense here, 400. Wages expense is going to be 400. Okay. Then the next item they are saying is production supervisor salary. Production supervisor is an overhead. It's not directly joining to the production partner. So it is also, there's no payable or anything. So we can consider it to be a cost to the relevant to the month. Credited to cash, debited to supervisor salary. Supervisor salary is an overhead. So let me put keep some space here and let me move on to the overhead cost. We have the supervisor salary. Supervisor salary 700. Credited to cash, debited to supervisor salary 700. Okay. Supervisor salary 700. Right. Factory electricity. Factory electricity, right? Look here. Factory electricity, you have paid 60. 60 you have paid. But what we need to carefully understand is there's an adjustment relevant to electricity expense. So that we have to be a little careful. Then what we do, right? Credited to cash, and we will be recognizing it here like this. Electricity expense, I'm not going to put it here. I'll put it as plus 60, and we will do the adjustment. We'll remove that whatever the adjustment from here. Electricity 60. I'm not going to put as a closing adjustment. It's 60. It's okay. Electricity 60. Right? Then we have the factory rent 600. So once again, the rent, there will be an adjustment in the future that there are some prepaid expenses. We'll do that with that adjustment. For the time being, I will put it like this. The factory rent, I'll put it as plus 600. After making the adjustment, we'll bring the closing balance here. Right? Factory rent is 600. Right. Okay. Administration expenses paid. There's nothing as anything to be payable or any other thing. So you can directly take that credited to cash, debited to P&L. Right. Now in my profit or loss, I have to take the sales. Then I need to deduct the cost of sales. I'll be having opening finished goods. Then I have the manufacturing cost. From that, I have to deduct the closing finished goods inventory. Right? Then you will arrive at the gross profit. For that, you do the administration, other income adjustment. Then you can deduct the administration expenses. So the administration expenses is coming to a value of rupees 200. Administration expenses 200. Finally, purchase of a machine 4,000. Purchase of a machine 4,000. Credited to cash, debited to PPE. Right? We got a machine at a value of rupees 4,000. Machine value is 4,000. Okay. Right. So you have done up to all the cash receipts and payments are being adjusted. All the cash receipts and payments are being adjusted. Right. Totals of the other prime entry books are given to you. Right. So we have put up all the adjustments, the cash payments, we have adjusted to relevant places. Then the other information. Totals of the other prime entry books. So we have the credit sales 12,000. Credit sales 12,000. So what is the double entry? Right? Debited to debtors control account 12,000. Credited to sales account 12,000. Right? Then we have the credit purchases debited to purchase account. Credited to creditors control account 8,000. Sales return 500. There's a sales return. Right? Sales return. There's a 500 rupee sales return. So debited to sales return. Sales return we have to deduct from our P&L. So minus sales return. We have to deduct 500. Debited to sales return. Credited to debtors control account. Credited to debtors control account 500. Sales return. Debited to sales return account and credited to debtors account. Debited to sales return account, credited to debtors account. Then look at the Roman number 3. Only rupees 100,000 worth of raw material has been received on 27th of April against the advance payment. This has not been recorded. So we have an advance payment we have paid to the creditor. No? We have made an advance payment which is an asset. Right? Of that items, 100 rupee worth of items have been received. Then what will happen? From the advance account will come down, credited 100 rupees. We are receiving items, which is a purchase. So we are getting items. So the purchase will increase from the advance account, right? So purchase. So we are getting 100 rupee worth of items. So there were 300 rupee advance, 100 rupee worth of items we have received. So whatever the remaining advance, our asset is only 200. Okay. Right. අපි advance කරා 300ක්. sorry 300ක් advance කරපුවා ඒක මගේ asset එකක් නේ. ඒකෙන් 100ක item සම්බුණාම ඉතින් එක පැත්තේ මගේ purchase expense එකට යනවා advance එක අඩු වෙනවා. Right. 300 to be written off as a bad debt. So you know the debited to bad debt expense. Bad debt එක යන්නේ අපේ P&L එකට 300 bad debt expense. Debited to bad debt expense. Credited to debtor 300 as a bad debt. Debited to bad debt expense, credited to debtors control account. Factory rent per month 200 and the rent has been paid for the first quarter. So we have already paid 600 for the first quarter. We are looking at only 1 month. So we have paid 3 months. That means 2 months is prepaid. 2 months is prepaid. So my prepaid rent is going to be 200. So that is 200 into 2, 400. Prepaid rent is 400. That we have to remove from here. We have to remove from here. So I'm going to remove prepaid rent 400. My factory rent is 600. I'm going to remove it from the rent expense and recognize in the prepaid rental. Prepaid rental is 400. 600 we paid, but only 200 is my expense. Okay. Then the next one, electricity bill for the month is 50, but you have paid 60. You have paid 60, but 50 is electricity expense. Then that means 10 rupees is prepaid, right? Prepaid. 10 rupees prepaid. So we got the prepaid electricity 10 rupees. Prepaid electricity 10 rupees. We paid 60, but the expense is only 50. Prepaid electricity expense is only 10 rupees. Our electricity expense is only 50. Seventh adjustment says the machine has a useful life of 10 years and the residual value is 400. The machine is depreciated on a straight line basis. Right. Now, when you are calculating the depreciation, you need to look at the net cost of this asset. Now we have spent 4,000. So our cost is 4,000. We have spent. But 10 years later, you are getting 400. So from the cost, you need to deduct the residual value. Because 400 you are going to get at the end of the 10th year. No? Right now you spend 4,000. Right now you have spent 4,000. 10 years later, by selling the scrap value, you are getting 400. So this is the net cost. This you need to deduct by the useful life, which is 10 years. Useful life, which is 10 years. And we are looking at only 1 month. We are looking at only 1 month depreciation. So 4,000 minus 400, 3,600. Divide by 10 into 1 divided by 12. So I'm getting an answer, a depreciation charge of 30. Depreciation is 30. Right? So what is the double entry for the machine depreciation? You know the double entry. Debited to depreciation expense. Credited to accumulated depreciation. So depreciation expense is an overhead. 30. Credited to accumulated depreciation that we have to deduct from the PPE value. Accumulated depreciation is 30. So debited to depreciation expense, which is an overhead expense, credited to accumulated depreciation. At the end of the month, the inventory balances were as follows. We have given the inventory balances. Raw material 300, the closing balance. Closing raw material balance is 300. Okay. Closing work in progress at the production cost is 80. So we can deduct it from here. Closing work in progress 80. It's not on the prime cost, it's on the total production cost. Closing finished good balance is 100. Closing finished good balance 100. Closing finished good balance is 100. Then we have to, from the beginning, you have to put the items one by one separately. Now we can close our statements. We can close the sales account. Sales account to the profit or loss. Sales value goes to 18,000. So the sales figure, I'm getting 18,000. Sales figure 18,000. Sales figure 18,000. Debtors account, the closing balance will come to 12,000 minus 2,800, 9,200. Raw material purchase, we are sending that to the manufacturing account. 1,200 plus 8,000 plus 100, 9,300. Raw material purchase 9,300. So the raw material purchase is 9,300. Creditors control account, the closing balance 7,200. Advance account, your closing balance. Machine account, your closing balance 3,970. Prepayments are 410. Equity, we need to wait for the closing profit. So we need to add the profit figure. So you will arrive at the closing equity balance. Right? Okay, so now we can close down the manufacturing account. 9,300 minus 300 is 9,000. Plus 400, the prime cost will come to 9,400. 60 minus 10 is 50. 600 minus 400 is 200. Right? 200 here. So the overhead cost will come to 700 plus 50 plus 230. It's 980. So my closing manufacturing cost will come to 9,400 plus 980 minus 80, 10,300. My manufacturing cost will come to 10,300. Net sales figure 17,500. Cost of sales 10,200. So my profit is 7,300. Expenses 500. So this will come to a value of 6,800, which is the net profit. The net profit is coming to a figure of 6,800. Finally, we got the net profit to be 6,800. So my closing equity balance is 7,700, which is fairly a very good question, which we have just covered, right? Okay. So in this question, we have covered the manufacturing accounts as well as the income statement in a different way. A good question for you to attempt and again. Right. So since the time is up, we will finish off the today's session